All right, all right, all right. Hello, traders. My name is Yaroslav, and today is Awesome Strategy Wednesday. Now, yesterday we had an awesome webinar where, in exactly 1 hour, we went through the whole spectrum of what you need to learn to open your first trade using MetaTrader 4. Now, I know you guys probably have a whole bunch of questions, so I'm here today to save you from them, to give you the answers to what you may have built up yesterday. Now, for those of you that did not see the webinar yesterday, I would love to give you the link right now in chat. So that's what we'll do. I'll have a look in chat to see if you guys want to ask me anything, if you guys have any questions or uh, or any concerns that you may have, and also just to say what's up to all of our viewers today, because there are a lot of you. So Tushar Agrawal, hello. Chandrakant Veer, hey sir. Hi to you as well. Salaraja, hello. Cindy Bell Vincent, that's a beautiful name. Cindy Bell, hello. Con Arian, hello. Ali Suzanne, hey hey. Oh, you guys are too nice to me, master. I'm just this is what I do. I'm a regular guy just like you guys, but some people do construction, other people do, I don't know, they're teachers. My profession is trading. So Cindy Bell has a question. Am new on the trade, using the demo accounts to trade, trying to improve, and now know how it's done. That's awesome. That's how you should start. You should always start with the demo account. Because you're getting your confidence, you're getting your feet wet, and you're learning how to use the platform. Oh my goodness. Some of you may be top-notch analysts from a great economics school, but if you don't know how to use the platform, you'll just make simple, easy mistakes. So it's always recommended to start with the demo account. So Cindy Bell, if you have any specific questions that you want to ask in chat, go ahead, write them out, and we will get to them. Now, we have Wave Music India, how to earn more profits from currency trade. You came to the right place, because today we are going to go through two trade strategies. One is a daily trade strategy. I will teach you guys how to put something on at the start of the day, and that way you can leave and have the trade be running. I will also teach you how to use trailing stops and how to use the average true range in order to focus on the daily movements that can happen within a currency or another asset. So Brijesh Parapiyati, yeah, hey Kushal Singh, anything you want to know, bro, just go ahead and ask it in chat. Binda Josen, hey, good to see you. Put your shares in gold. Shaki Lias. Actually, let's have a look at gold. Why not have a look at gold? It is one of the assets that are really volatile and moving quite significantly. So Australian dollar, a lot of strength in the Aussie dollar. What could have been the cause of that? So this interest rate decision caused the Aussie to fall. Okay, it looks like we're back online. I don't know what that was. It seems to have disconnected me for a little bit there. Okay, perfect. So the Royal Bank of Australia came out with their interest rate decision yesterday, and just like their counterparts, the Royal Bank of New Zealand, they were also very negative on the state of affairs in their economy. And they decided to have forward guidance of the fact that they might lower interest rates, that they're looking really close to that. So we as investors, as speculators, we price that in ahead of time. Now, this movement up is a little bit interesting. It could be US dollar weakness, because we have had some weak core retail sales and weak retail sales in general. So that was on Monday, and then on Tuesday, a little bit underballing the core durable goods order. Now, basically, this is an indicator of inflation that we have for the immediate time coming ahead. So basically, all sorts of manufacturing goods that are ordered from the top tier companies in the United States, they give their they give their information to the Consensus Bureau of the United States, and they put together this indicator for us. So the fact that a lot less core durable goods are being ordered by the production and services industries in the United States is an indication of a weaker stance for the US dollar. Now today we have a really important indicator, the ADP non-farm employment change. This is a precursor to non-farm payrolls, and we talked about this. So as soon as the webinar is over, you guys keep an eye out on this, and Wednesdays is an awesome time to trade because it is right in the middle of the week, so whatever was happening will continue, as you know that trends form at the start of the week. And look at what oil is doing. Guys, this is a huge rally for oil right when everybody thought that this could have been the end. And what are we expecting right now? If crude oil inventories come up 20% less than the forecast of minus 425,000 barrels, if we have a negative number that's bigger in the reserves, then it will also be a reason for oil to grow, right? The less reserves we have, the less supply there is, the more something costs. So keep an eye out on the ADP non-farm employment today, and also crude oil inventories. Actually physically put it on your graph, and I will teach you how. Let's do that right now. So 15:15 and 17:30. Let's pull out our graphs. This is my MetaTrader platform. It looks a little bit crazy. Let's get rid of some of these Fibonacci numbers, and there we go. It looks a little bit calmer and cooler. Let's take off this moving average as well, and this RSI, we don't need them right now. So at 15:15, what do? We pull out our sturdy vertical line, and we find 15 o'clock on our time. Now we are right now at 12. Okay, this is another interesting time. You see how my time is below. So right now it's 12 where I am, but it's only 9:08 where my server is located. So there's a 3-hour difference. So we wouldn't put it at 12. We would put it at sorry, not at 12. We wouldn't put it at 15. We would put it at 12. So this is where we have, oh, sorry. Okay, I guess we can do it like that, and then you double click it and you move it. So at 12, we have one news coming out, and the other one was 17:30. So that would be 14:30. If we drop down to the 30-minute graph, then we can get 14:30. Perfect. So these two, oh, the only problem is that we put them on the wrong currencies. So we would take a currency that's a much more fluid, like the euro dollar, and the euro dollar moved in the direction that we thought it would. It moved right up, bouncing off of this level of support. So we are currently looking for euro strength if the non-farm, the ADP non-farm employment figures come out. And like I said, again, we are looking at 12 p.m. there. So where are we right now? Well, this is the daily graph. Let's jump down to the hourly graph. Zoom out a little bit to get our reading. Oh, it's really far away. Okay, so something like that. Drop down to the 1 hour and then find 12 p.m. Perfect, right there. So again, we are watching to trade on this red line as soon as the news come out. And then US oil, which is right here, right click, new chart window. We got a new chart window. Then we drop down to the 30-minute time frame. And this guy is going to be at 14:30. 14:30, perfect. So again, when we come out to, when the news comes out, we already want to be ready and set to open our positions. And this is one way that you can track economic data and trade it on your graph. Again, you can have either this window open or investing.com open or any other aggregate that provides you with economic data. Now, as soon as the news comes out, you want to have part of your screen open like this, constantly refreshing it, and part of your screen open like this so that then you can open your trades. And what would that look like? Basically, you want to have your trading window open. You want to set the size ahead of time. So for my account size, I have, looks like all my money's gone. Yeah, so this account has been moved. And basically, you want to have the size already in position. And you want to be able to trade right off the bat as soon as the oil price comes out. Again, if it's more than 20% of the forecast, we sell, right? Because if we have a lot more crude oil inventories, that means the price of oil will drop, right? So we sell. And if it's a lot less, then we buy. I hope that makes sense. And again, you can read all the details of what the different price explanations mean. So for more. Okay, good, we're back. So that's a little bit on how to trade the news. Hope that helps you guys. I want to go back to reading some of your questions because I know that a lot of you may have questions for me. So make sure that we're live. Perfect. All right, so where were we? Kushal Singh, put your shares in gold. Did we look at gold already? We didn't look at gold like we wanted to. Here we have gold. So we were thinking that we were going to break the right shoulder, and right now we are just hovering above this level. So obviously the break is not coming yet, and it looks like price is moving away. Now we are a little bit in a risk-off scenario right now where the S&P 500 index is very much above the triangle. So investors are looking to put more money into risk assets like stocks and different emerging economies. So if we look at the all-world composite ACWI, the all-world composite index, it is also right up there. We have broken past these levels and fixed right above this level. So the rest of the world is very much inclined into having a risk-on scenario. So get ready to trade those indexes. We can also look at the VIX, which is the volatility index. As soon as this volatility index gets above 15, that is when you should really be paying attention to stock market indexes, because that's when those guys fly, and you can easily make 4 or 5% in a day if you're leverage trading, which by the way you're provided with by Olymp Trade. If you go here and on the Forex platform, you obviously have a multiplier, and that is your leverage. And same thing with the MetaTrader platform. By automatically you have a 1 to 400 leverage on all of these instruments, So if you want to trade the Nikkei 225, then you have that full amount of 400 to 1. Okay? Now this spread sheet, all this information is everything that you want to see. Okay, I'm just checking to make sure that everything is good with the stream. For some reason, we have these annoying lags, just stuff stopping right mid-play. I don't know why that is, you guys. I'm trying to fix it. But nonetheless, let's continue. I want to finish going through chat. So gold right now is on a standstill. So we don't have a lot of indication of which way we're going to go, up or down. I don't know right now because we are above this channel. Now this channel that we have here that we are using as a support for a really long time, and now its resistance is from 2015. That's right, this trend has been for a long time, and it's still respected by gold. I do see the trend more bullish, because until we break this level and fixate below it, we're still hovering, right around this line, and gold could very easily take over this level and continue going up higher. I want to continue a little bit with chat. Oh, you guys are typing in Arabic. Guys, unfortunately, I don't speak Arabic. Hello all, I'm a new user. Wonder if all right, you guys, if you can keep it to English, that way then I can talk to you guys a little bit better. Anum Kumpar, hi, is there a live tip help on a limb trade? I am the live tip help, but you can always get in touch with somebody if you have a question. If you go to the platform and then go here into the question mark, you can even ask whatever you need to learn here in chat or using the open hotline. All right, you guys, today's the Persian guy day. That's so funny. Yeah, today's Persian guy day. So perfect. Oh, Tanvir HDTV. Hey, and hey, Glory Arubi. Nice to see you. Hey, guys. So Tanvir HDTV with the great questions. I have a question. 30 minutes ago, PMI news was released. I was looking at the chart. Once the news was released, I saw the next candlestick started down and then went straight bullish. Can I know why? All right, let's have a look at the PMI figures. So perfect, PMI for Great Britain came out. Again, this is a currency that goes against all logic currently at the time. So this should be a bullish, or sorry, a bearish rating. And let's see what the pound did. And the pound went straight up. Do you know why? I don't know why. This is one of the things that happens in the market. The only thing that I can tell you is that this formation, there was a lot of bullish interest in the market before that. So the news isn't particularly market moving. Do you remember that once or a few days ago I told you that nowadays really small economic, like not even small, the services PMI is really important. It's the purchasing managers index for all the service companies. So all the things that they purchase, but the things that they purchase is like what? Is papers, office materials. It could be equipment that they purchase in the name of their client. That's also like oil and gas equipment is bought by consultancies when they're consulting oil and gas companies. So that could also be a reading that that kind of level of activity is dropping. But the CPI, PMI, those kinds of things are not giving that volatility and that drive to the markets like it used to. 5 years ago, you can get a lot of movement from this economic data. 7 years ago, it was even more. And 10 years ago, boy, that was heyday. Traders only traded using economic data and felt great. It was much more easier to trade 10 years ago. Now we have algorithms that monitor these things and that they can react much more faster than human beings can. And their logic process, like I said, when I went to Sberbank CIB, a buddy of mine that works there, he told me that their algorithms have 2,000 parameters that they analyze before they open a trade. So obviously a human being can't come even close to that. Maximum we have 10, 15 parameters that we can compare: technical analysis, fundamental analysis, sentiment, and especially if we're looking at the market footprint, if we knew exactly what trades went through. Whereas here, we don't have the market footprint. The market footprint is inside each and every candle at every price range. Like you can see here on the right side of the screen, each one of those prices, each tick is a trade being facilitated. Right? There's a range that buyers and sellers interact. And so what I see from the graph, just from the graph that we have here, bulls have taken over. So despite this large slump that we had down, it didn't go anywhere. This level right here, this area of interest that we have, it's even starting from here, you guys, like starting from here and up, like this area of interest, is a no-go zone. And another thing that's really important to keep in mind is that over the last 10 years, since we had the economic financial crisis started from the US, it spread all over the world and everybody lost their jobs, banks went bankrupt. There has been a lot more money sloshing around the financial markets. That was the number one reason why I got into trading, because I realized money was being printed and was being pumped, just injected right into the financial markets. So a lot of these trades are being facilitated by institutions that have an interest in keeping the pound high, in keeping the pound very strong. And boy, I tell you, the pound is a whole entire different animal. If Brexit comes out clean, Goldman Sachs posted an article yesterday that they were very bullish on the pound, and that as soon as Brexit came about, that the pound would shoot up to its pre-Brexit values. And what do I mean? I mean right here at 136. So if everything goes good with Brexit, and in the next few days or few weeks or few months, we get a positive sentiment, a positive reading from the House of Commons in the United Kingdom, then we are going to shoot right up. And so this area right here is just not being able to get punctured. 130 is a huge point of resistance, a huge point of support for the British currency, and we want to keep looking at that to see what happens. And in order to break the Brexit impasse, the UK Prime Minister, Theresa May, she's looking to turn their Labour leader, Jeremy Corbyn, into a friendly ally. Like, they were enemies before. He was totally against Brexit. But now that the aisle is crossed, they're looking to create a joint plan that will go through with the House of Commons and with members of Parliament. That's the biggest hiccup that they have right now, is that inside the government, members of Parliament are so, withdrawn from public life, are so withdrawn from what's really going on in the economy, that they're very inflexible. They want things their way, and they don't know what the effect is going to be on the economy. And it could be very severe. But again, I think even if there's a worst case scenario for Brexit, we could dip down below 30. But because government and private equity interest is so strong that the pound stays strong, that they're really quick to push the pound up away from any kind of lower levels. And we can see that, when we go around here, there was a lot of struggle. Despite the whole world being bearish on the pound, we still had these huge spikes, which indicates that in a split second, millions and millions of pound sterlings are being injected into the currency market to float the British pound. So that's what's happened. We're also having another delay from Theresa May for the European Union. They're asking for more time because she needs to create more allies within her government. Her plans are just not going through, and I believe last vote that they had, the members of Parliament voted no to everything, to every single clause, starting with trade, to the Irish border, to a no-deal Brexit, to another referendum. No to everything. Okay, then what? Yes to what? What are we going to have with that, with the Brexit negotiations? Also, Angela Merkel from Germany, the German Prime Minister, is also very negative, is very harsh on the British government, and she's saying that how much more time do you guys need? And she's calling for a no deal on the European side. So as tensions mount, more and more European leaders are trying to create a no deal situation, because Great Britain, besides being a broker, right, a commodities and currency broker, provides very little goods or very little trade opportunities to the European Union, right? They mostly provide financial services. That's the number one export of Great Britain to the European Union. So, and the Dutch Prime Minister is also signing up to that thing as well, to the no-deal Brexit. So let's continue reading in chat what you guys are talking about. HDTV, because the actual is worse than expected, how can I know that this was a straight bullish signal? Now, the actual was not more than 20% less. Remember, we talked about this, Tanvir, is that it has to be at least a 20% difference. 20% difference. Here we have like 5% difference. So we didn't